Hello there and welcome to Core Finance, where I'm joined by Alessio Rastani from leadingtrader.com. How are you today, Alessio?
Thanks for having me. First show, Core Finance.
It's a name to remember.
It's great to be here.
It's a name we can't forget. Let's go on to the slides you brought in.
Great.
So euro dollar, caught everybody out or caught a lot of people out? What's going to happen next?
So here's an interesting take on the euro, which many people may not be aware of. One of the guys I follow, his name is Jason Geppert, great guy. What he puts out on his website is, his website is called sentimenttrader.com, and he actually tells folks about what insiders are doing. And if you take a look at in the excerpt in the middle there, it shows insiders or commercial hedgers, their positions on the euro. And so the smart money, commercial hedgers, they are incredibly short on the euro. In fact, what's happening is they're reaching the euro, as far as the insiders are concerned, they're heavily short on the euro right now. Having said that, that doesn't mean we're going to short the euro just like that. We need to wait for the trigger. And if you take a look at this chart of the euro going back at least a couple of years, so it appears the wave count, the way I see the wave count on the euro chart is we're completing a wave 4 correction, this sideways move. And I think this wave 4 correction will likely end in the zone between 116.20 to 117, potentially even to 118. So if you're looking to go and short the euro, which is what the insider and the smart money's positions are doing, I'd be looking to short into strength, into resistance. So any moves into that 116.20 or 117.14 resistance are the levels I like to get short. Again, with a small position size, because it could blast a bit higher. And then looking for that wave 5, the wave 5 move lower. Well, how does that go with your view?
No, I think that's. I think the only issue now is just how much higher we will go before this cross.
That's right.
This 115, 116, etc., and just not to maybe knowing that people are short. I mean, the insiders are short.
Yeah. Not
to give up on. You get stopped out a couple of times. But
yes.
It's like because that's what people do. They
that's right.
get a couple of slaps. They get upset and they don't. And then
they leave. Yeah.
I mean that's one of the biggest secrets I think of trading. You can pay on losing trades. You look at it as paying to get the right information.
That's right.
To get the right position, the right direction.
Absolutely.
People don't look at things like that. So
as one American trader put it, the key to trading is knowing to take small losses, and it's important to position size with small position sizes. So at least it gives you the chance to stay in that big risk return trades. That I think this could be one.
Okay, let's go on to the next slide, which is gold. And is there any hope here? Well,
there could be. I mean, look, the fact is there's major support below us on gold between 1,200, a magic number on gold, and 1,190. For folks who may not know why 1,200 is a magic number for gold, is because that's the production cost to produce 1 ounce of gold is $1,200. So I basically think, look, 1,190 is going to be a major support. I think we're going to head down to that level, potentially. That's also the 61.8% Fibonacci retracement on gold. I think wave 3 potentially will end there and then look for a bounce or rally. You could trade that bounce if you want from 1,190 to 1,200. That should be a wave 4 correction. But I think we'll have another retest of that level, wave 5. But bottom line is, look, gold is becoming oversold. We should be able to see some kind of bounce here. I'm not looking for a major rally in gold all the way back to 1,300. Just to trade the bounce here on this market.
Okay.
Yeah.
Next up, we've got
silver. We've already talked about it a little bit, but bottom line is the silver, the same thing. If we get a close above 16 or a close above the daily 8 EMA, again, I want to just point everyone to this thing. If you put an 8 EMA, 8 exponential moving average on your chart, which is this red line, notice every single time the price closes above the daily 8 EMA, that's usually a point where you see an inflection point. So you could get long once we've got a close above the daily 8 EMA. We've got some time resistance below there as well, so we could be reaching an inflection point, a turning point in silver soon. And just trade that bounce, which we got there on that.
Okay.
Yeah. Finally, I think you said that you quite like this chart on JC
Yeah,
Penney.
it just looks like, well, I mean, it's one of those things that you're in such a sort of tight range now
That's right.
at the bottom of the triangle. That,
That's right.
But whether you're right or wrong, you buy and you get stopped out or whatever, you're risking so little in order to potentially get a coiled spring effect on that. I mean, the only thing that worries me is obviously, as you were saying before, about retailers.
That's right.
The traditional retailers are getting slapped down.
Well, exactly. For folks in the UK who may not have heard of JC Penney, although I think it's unlikely, I think it's a famous name, but JC Penney is one of the major retailers in America. I'll be honest with you, I don't really like their shop that much, but it's okay. But the bottom line is that a lot of these retailers in America, and probably in this country too, JC Penney, Macy's, they're all suffering. I mean, just recently the shares of Abercrombie and Fitch dropped quite significantly. And the reason is that these retailers are not catching up with the new way people are shopping these days. People are now shopping online, as you mentioned, I think earlier was Amazon. People are buying their stuff online nowadays. But the fact is that these retailers like JC Penney, Macy's, Abercrombie and Fitch, they're not catching up with this new technology and they have to do something soon. So we go back to that chart, guys. I think there could be an opportunity here to buy JC Penney. This is a stock that's fallen. It used to be trading at 80 bucks. Some years ago, it was 80 bucks a share. Now it's what? It's $5. So look, there's a good potential for risk return here, good risk return. The sentiment, as you can see, the dumb money sentiment, courtesy of Jason Gephardt there, has reached extremely negative. So people, the general public, have become extremely negative on retailers, especially JC Penney like this one. But I agree with you, Zach. I think that, look, this wave 5 potentially is coming to an end. We're going to see some consolidation here. I would need to see a close above $5, a strong close above that wedge, that pennant formation above $5. We got some bullish divergence there as well. But then I would look to establish a small position to get long and just build that position. Any views on that?
Yeah, I mean, I think the only thing is obviously the trend is so negative there that if you got $1 or $1.50, you'd say thank you very much, I'm off. So I think that's you wouldn't want to push your luck too much on this one.
That's right, and you could put a stop loss just beneath $4 to have some risk control. Okay,
let's just finish off with the FTSE, which is looking quite strong, isn't it?
I like this chart set up on the FTSE, mostly because I think, now I haven't put the wave counts on this chart, but to me, if you look on that right-hand side, that correction we've had, that drop we've had since June, to me that looks like an ABC correction. And one thing we don't see on that chart is the fact that we're resting right now. We're resting on the weekly 21 EMA, major key support level. I'd be looking to get long right here. Small position, maybe half position right here on the FTSE today. And then if we can get above, so keep an eye on 7,400 on the FTSE. If we can close above 7,400, get long, because I think we're going to go ahead and retest the previous high, 7,600, 7,700. And by the way, the MACD on that chart, take a look at the MACD, just look at that. It's crossing over. So that's also a trigger point on the FTSE as well.
Alessio Rastani from leadingtrader.com, thank you very much for coming in today.
Thank you.